Good day, and welcome to today's Lake Resources webcast as part of the Planet MicroCap Showcase. It is now my pleasure to turn the floor over to your host, Managing Director, Steve Promitz of Lake Resources.
Thank you very much, and thank you all for joining. I'm going to be talking about lithium today and what Lake Resources does, which is focusing on a cleaner lithium, a cleaner and a more environmentally positive lithium for the market. Lake Resources trades on the Australian Securities Exchange as ticker code LKE, and we also trade on the OTC as LLKKF. Now, I will be making forward-looking statements today, so please, at your leisure, read this disclaimer. This presentation and similar presentations are available on our website at lakeresources.com.au. Lake Resources is about delivering a cleaner lithium for an electric world. We have four projects in the heart of the lithium triangle where nearly half of the world's lithium comes from. And the five key things I want to spend time talking about with Lake is the fact that we produce a clean lithium, very high purity product from our flagship project. It uses a clean technology. Our technology partner is based out of California, and they've adapted a very well-known water treatment process to work in the lithium space, which is backed by some very large investors, including the Bill Gates-led Breakthrough Energy Fund. This is about delivering a better outcome for a cleaner environment. The product is responsibly sourced. It returns most of the water back to its source. It has a very small physical footprint and a small CO2 footprint. That's what electric vehicle makers want. We have a clear pathway to getting this into production. We've demonstrated this to work at benchtop scale. We've been running a pilot plant with Lilac for more than 12 months. Because of that, it's a relatively small process to move into production in 3 years' time, and we're doing that cost competitively. We're currently in the advanced feasibility study stage. We aim to move into construction finance in the middle of next year. And last of all, the great thing about this project is it can be scaled up to suit demand. And that's partly because it's modular. It's also because it's a straightforward process. And we have other projects that we could also bring on. So they're going to be the five key themes that I'm going to be talking about with Lake. But first of all, let's look at what is happening in the lithium sector and why it's something to really look at. We've all read in the press about the changes with electric vehicles. China has mandated electric vehicles. The EU has provided considerable subsidies towards it as part of incentives to their economy during COVID. And the key ingredient that goes into batteries that drive those electric vehicles is lithium. Lithium-ion batteries in the electric vehicles is probably one of the largest 21st century growth areas, certainly in the first half of this century. To give you an idea of the growth that's occurring with lithium, depending on which forecaster you use, we need between 8 times and 18 more times lithium production than was produced last year. And as an example of what that's like, Volkswagen a few weeks ago announced 6 new mega factories, the factories that build lithium-ion batteries. Those 6 mega factories plus 3 others that were announced that week basically would consume all the lithium that was produced last year, and that was announced in 1 week. So it could well be that the lithium demand growth of 20 to 25% compound growth year on year over the next 10 years could in fact be a little on the low side. And what is that? How has that been manifested? Well, we've seen this growth, or what we call the growth in the macro picture now for some time. But in December, we saw a slight pickup in pricing, and then January, February, we saw lithium spot pricing for carbonate in China increase more than 100% in the space of 4 weeks. And it could well be, some of the signs are that we're going to see another leg up in that lithium price in the coming 2 or 3 months. And that's because there is a supply squeeze coming. We need a massive amount of new supply, and there has been underinvestment in this space. So it's quite a good macro story. And it's not just driven by China. The growth in battery plants and in EV makers, both in the EU and North America, as well as in China, has really been massive. And under the Biden administration, we're going to see more of this. So what is Lake doing about that? Well, the thing with lithium is, in my words, not all lithium is created equal. Lake can deliver a solution to this EV and battery demand because, first of all, the battery makers need high purity products. Now, whether we're producing widgets or lithium, naturally there's always a preference for better quality, higher purity. In this case, the battery makers need high purity, or should I say low impurity products. That's to avoid performance issues. And so our aim is to deliver a high quality product, and that's why we're using a direct extraction process. The second thing is that the electric vehicle makers want and need to see more responsibly sourced, traceable, environmentally appropriate battery materials. Smaller CO2 footprint, lower water usage, lower land use. That is being demanded by electric vehicle makers at the moment, particularly out of Europe, and we're going to see more and more of this. And so while you need high purity and while you need a good ESG outcome, you also need, of course, to do that in a low-cost manner and be able to scale up that performance and that production, be able to scale that up to meet this growing demand. And Lake, together with our technology partner, Lilac, can actually deliver that. So this is just not all talk. We've demonstrated we can produce a high-purity product. In October 2020, we came out to the market with, at that time, the highest purity product that the market had seen. Orders of magnitude better than what is loosely considered battery grade at 99.5%. And this wasn't just out of benchtop testing. This was out of pilot plant testing of our brines from our flagship Catchy project in a pilot plant operating in California. And then we took that product and we put it into batteries. So it's one thing to send it to offtake partners. We were fortunate to work with Novonix. They're based out of Nova Scotia in Canada, and they've been a leader in battery technologies and in battery testing for more than a decade. And they demonstrated that our product worked as well, if not better, than other tier one products in lithium-ion batteries. So both of these were a great tick to show not only does the process work, but it works well and delivers a high-purity product. So the next thing I talked about was the importance of an ESG benefit. Electric vehicle makers are looking for sustainable, traceable battery materials with a small environmental footprint, and this process delivers it. In the top of this slide, you see the two key methods of producing lithium at the moment. In the top left-hand corner are what we call evaporation ponds, and this is what's used for the lithium brines in the lithium triangle of Chile and Argentina. In this location, what happens is the salt water that you might imagine in, say, something that looks like Death Valley in California, here the salt water also contains a lithium dissolved in that salt water. So it's pumped to the surface, it's put in a pond, the water's evaporated away, all the salts are concentrated, and then you separate lithium out from it. Nothing particularly wrong with the process in that it does have a low CO2 footprint, but unfortunately all the water from a hyper-arid environment is evaporated away. And so that's not a great outcome when we're looking at community outcomes and also water balance in an arid environment. The other half of the lithium comes from digging a hole in the ground, and we separate out this grey material called spodumene. Most of that is then sent to East China to get roasted and turned into a product. What we do is that same brine, that same dry, arid environment, we pump that water out. But all we do is separate out the lithium and re-inject it back to where it comes from. So a much smaller physical footprint and a much better outcome. Here's another slide, slide 11, to give you an idea of that. Those evaporation ponds can be anywhere from 10 to 20 miles wide, and what we're talking about here is something the size of 1 or 2 city blocks. Furthermore, with a low CO2 footprint, this stands out head and shoulders above hard rock mining. Brine evaporators are here on the right-hand side, the small blue bar. What we're doing will even have a smaller CO2 footprint in comparison to hard rock mining, about the middle of that graph. And then when you include the energy impact of converting that into hydroxide, a very large CO2 footprint for each ton. And naturally, both the consumers of electric vehicles and the electric vehicle makers want to keep that CO2 footprint small. And on top of that, there's now legislation in Europe to keep that CO2 footprint small. The direct extraction process, direct lithium extraction that we use with our technology partner, this is a very well-known water treatment technology. It's been around for more than 70 years. It's used in at least half the water treatment plants in the world. There just hadn't been an economic driver to go and use this technology in the lithium space. It's fast. We're talking hours instead of years. It recovers virtually all of the lithium instead of half using traditional methods. It's cost competitive and scalable, and as I mentioned, environmentally friendly. If we look at these processes, evaporation processes have been around since the Romans. They work well, but in the last 5 years, we've seen battery technologies improve out of sight, and so they need high-quality inputs. In the early part of the 20th century, ion exchange was invented and was well used after the Second World War as a water treatment process. And now what Lilac has done is adapt it for the lithium space. So a new technology for a new demand here in the 21st century. And one of the benefits of producing a high quality product is you get a premium pricing, and yet we're still cost competitive with other brine producers. So very well positioned to really deliver something exciting to the market. Moreover, we've essentially de-risked this process by through its scale-up. Normally, when you're operating in a pilot process, you might be talking 50 to 100 times scale-up risk as you move into full production. The difference here is that the modules that are being used, essentially we just add more of them. So instead of 1 or 2 modules operating a pilot plant, you've got 50 at production scale to start producing 25,000 tons per annum. So this is one of the benefits of a water processing method. It's modular, it's scalable. We just drill some more wells. It really makes it quite compelling in this space. And so simply what we do is on the left-hand side of this diagram on slide 18, we replace the evaporation ponds with these modules or tanks, and they then quickly produce and extract the lithium that's required so we can return virtually all of the water back to its source and continue to produce a high-quality lithium carbonate product. So that's the process, and that's why we're working in this space to produce a higher quality product. So let's talk now for a little while about our flagship project and the other projects. As I mentioned at the start, these projects are in the heart of the lithium triangle, and this is where nearly half of the world's lithium production comes from. All of the major producers are there, and we have projects as well. We've got a very large footprint, nearly 500,000 acres of mining leases. I'm going to look at the lower project, Kachi, which is down the road from a well-known company on the New York Stock Exchange called Livent, ticker code LTHM. And then our other projects, Cauchari, Olaroz, and Paso, they're next to a company called Orocobre that's recently been in the news, producing for 5 years. and Gengfeng, one of the big Chinese companies that will be coming into production next year, together with their partner, Lithium Americas. So right in the heart of all of the big players. Our Kachi project, something's gone wrong here, sorry. Our Kachi project, my apologies, I kept getting the wrong button here. Okay. Our Kachi project is, as I said, in the heart of the lithium triangle, and it looks like many other projects in this space. It's dry and arid. It might rain once a year. It might rain once every 5 years. Very large footprint, over 180,000 acres, about the size of New York City or 12 times Manhattan. The resource that we've defined at the moment is quite large and could easily get much larger. But even of that large resource, less than 20% have used over 25 years of production at 25,000 tonnes per annum. And we aim to have our definitive feasibility study finished by Q1 next year, and then move into construction finance round in the middle of next calendar year, aiming for production in 2024. We've modelled this now on the back of a detailed pre-feasibility study. We're in a definitive or final feasibility study at the moment, and the results are really quite compelling. It gives a project value after tax of 1.6 billion US, and an EBITDA line, an operating cash flow line of 260 million annually. So these are pretty significant numbers, particularly for a project of this order, and that's because it's high margin. We produce a high purity product. It's at a cost competitive level, and we could double that production. We do have a study underway, and then the numbers look really compelling. We're currently in the early phase of project finance discussions with export credit agencies, and we'll have more to talk about the debt funding of this project as we advance in the year. Look out for that one, because that will certainly bolster investor sentiment that this is going to happen. The processing plant itself will look pretty much like in this image. As I mentioned, we replace the evaporation ponds, and in replacing those evaporation ponds, we put a warehouse or building. You see the letter A on the right-hand side. Inside that would have those 50-odd extraction modules. Everything else on this flow sheet is pretty much the same. We also plan to use solar hybrid power, and that will reduce the CO2 footprint even further. So if we look at our timeline, our focus at the moment is to complete the definitive feasibility study over the next 9 months, the environmental social impact assessment, get a demonstration plant of the process on site, get some more samples into and out of batteries with their results, and also to potential offtake partners and electric vehicle makers. Please watch out for those announcements, because we are having some pretty interesting conversations with some household names. Then moving into construction in the middle of next year, as I said, aiming for production first half of 2024. Now, of course, you can't do all these things unless you've got a solid board. I'm fortunate that our board has had a considerable experience in South America. I want you to look particularly at Nick Lindsay, who recently became the technical director and an executive. He's had more than 30 years' experience on developing projects like this. Robert Shrebsky has also spent time working in Chile, Argentina, as myself, particularly back in the 90s for 6 years, and I've maintained the relationship. We all speak Spanish, and we've got a very solid team on the ground, and all of us led by our chairman, who spent more than 2.5 decades in the capital markets. When we look at what the company actually looks like, we've got a market capitalization of about 250 million US. We do have quite a lot of shares on issue, nearly 1 billion shares on issue. But don't worry about that. On the Australian Securities Exchange, it is quite common, instead of, say, 50, 100 million, for it to be more like 1 billion shares. However, we're well financed. We're well financed through to the next phase of construction finance discussions. And the share price has responded quite favorably at the start of this calendar year due to the increase in the lithium price, but we've got a long way to go from there. And the reason for that is we've got research with price targets double and triple where we are now. We're trading around 30 cents Australian. We've got price targets of 60 to 70 cents Australian and valuations over $2 a share. We've still got a little bit of catch-up to do with some of our peers and a whole lot more upside because of the sheer number of projects. So in summary, this is a 21st century solution to a 21st century problem in the demand and how we're actually going to get all of that lithium into the batteries. The projects are large, and so they're scalable. They're producing a product that the market wants and needs, which is a high-purity product for the battery makers, and best of all, an ESG benefit because it's responsibly sourced, a smaller CO2 footprint, a smaller land use. This is the way of the future. So thank you very much. I do have a few questions here, and I'm just going to go through those. So one of the questions has come up, are you funded appropriately at the moment? As I mentioned before, we do have around 19 million US at the end of January. That's come down a little bit since then, but we're certainly well financed to complete the feasibility study, all the ancillary works, and then have some spare so that we can reasonably do the construction finance by the middle of next year. So that's when we'd probably be looking at another capital raise once we've got the news of the debt financing out and also some of our potential offtake partners. There's another question here about how those discussions are going. Look, they're progressing well. I'm sorry I can't talk more about the offtake partners or who we are talking about. Please understand that an agreement has to be both entered into and then the counterparty has to be happy with a public announcement before we can say that. But please watch out for those announcements because we did see another company called Piedmont, ticker code PLL, do very well when they announced their partnership with Tesla, for example. They moved from 100 million to a 1.5 billion market value in the space of 6 to 8 months. And we would expect a price appreciation when we announce that, together with the debt financing. I've got another question here about why are there so many shares on issue? Look, I do realize this is an issue in North America. You might be put off by seeing 1 billion shares on issue instead of, say, 100 million or 50 million. But fear not, this is actively traded on the ASX and actively traded on the OTC. We've had a lot of volume this year. And we are focusing on North America and European investors, particularly on the funds management side, because they're quite keen on this sort of story. And then last question here is the sorts of news we can expect to see. Look, I understand that that there's a lot of news coming down the pipe, not just about debt financing, not just about our offtake agreements, but also the fact we'll be doing more drilling. We'll have more to say about drilling. We'll have more to say about expansion of potential expansion of production. There's another question about whether we'd use the Lilac process on all of our properties when they come online. That remains to be seen. Certainly our focus is on the Kachi project to start with. It could be that Lilac sort of gets full on the commitments for that project. And we do continue to test other technologies, and we'll see how that develops. The market does need a lot of lithium coming, and so we need to be well prepared and have a number of plans about how we can deliver on that. And then another question about whether we would look to re-domicile in the US. Yes, we have been looking at that and are looking at that. That would probably be a joint listing on the ASX in the US. I'm not too sure when that would occur, but when we've got more news to talk about that, we'll certainly bring that to the market. So thank you all very much for your questions and your interest. And I look forward to staying in touch. If you need to contact me, it's steve@lakeresources.com.au. And again, our website, lakeresources.com.au. Don't forget the .au at the end. Thank you so much for your interest, and cheers for now.
Thank you. This does conclude today's webcast. Thank you for your participation and have a wonderful day.